Today, we are going to talk about the future of the housing market. There is so much I'm going to talk to you about today. But let me get started first with the big three in the housing market update. Prices are steady. Inventory in Oʻahu is steady as well. We saw that last week with the housing market report from the HBR. And then rates, VA rates, they're looking pretty good as we end the week. But let's get into the little more specific on some of the headlines. First, we had a big home builder report come out this week, the National Association of Home Builders Sentiment Index, and they're feeling better. They're not feeling great, but they're feeling a lot better. And Fed rate, members of the Fed are talking, and rate cuts are pretty much guaranteed for the rest of the year. There's only 2 more meetings, but we're pretty much guaranteeing those. And then get ready for the housing boom. Yes, you're not going to want to miss this. We're going to talk about why the housing market is going to explode. Not in a bad way, not in a 2008 way, but in a World War II housing boom kind of way. It's going to be even bigger. All right, and then VA rates are down just a bit, but they are now under 6%. Let's talk about sentiment. How them home builders feeling? Well, them home builders are feeling a little better. Their overall sentiment is 37. That is up from 32. Still in the 30s, and anything below 50, they're not very happy, but they are much happier in the month of October. And really across the board, the 3 metrics, they all went up. Current sales expectations up to 38 from 34. Future sales expectations, first time above 50 since January of this year. And January springs hope eternal, right? So, and we all thought that the market was going to take off in January, but rates just stayed sticky stubborn, but they went from 45 to 54. So that's good news. Buyer traffic up from 21 to 25, and that's in large part due to interest rates coming down a little bit more excitement about the possibility of buying a home before the end of the year. So that's really great news for home builders. We'll see what it looks like with permits. We'll get that number out next week, but a really, really good report compared to what we had been seeing really the last 6 months. And the Fed is getting serious about rate cuts. There's been a lot of news from the Fed this week, and they're meeting next week. All right, the Fed Beige Book, which is basically a compilation of comments from the Fed, shows that signs that the economy is starting to slow and that unemployment could rise higher and faster than what they expected. Fed Chair Powell this week actually even said they may stop reducing their balance sheet in the coming months. Now, this is very good for interest rates. He said, really, and he also said that they should have stopped buying bonds much sooner than they did because really they didn't see inflation just going sky high like it did back in 2023, 2024. So he's basically saying, yeah, you know what, we should have stopped buying bonds sooner, and now it looks like they're going to start buying bonds again. So that should really be good for interest rates coming down. And that's something that's good. When the Fed chair says that, usually you get lockstep from everybody else, at least the majority of the folks. Yet Fed Governor Waller is a candidate for the next Fed chair position, and he's saying he is in favor of a 25 basis point cut in October and thinks that we should get down another 1 to 1.25 points before we're in a neutral or an accommodative position. Right now we are in a restrictive position with the current Fed funds rate. So that's encouraging as well, because he does have a lot to say. We also had Philly Fed President Paulson come out and say she was in favor of 2 or more cuts this year. She's not a voting member, but still her remarks carry some weight. So the forecast remains 2 more cuts in 2025, the October meeting and the December meeting for 50 basis points. We also will get a CPI report. Remember, the BLS brought back some of their people this week so that they could come up with the consumer price index, because that goes into Social Security payments. So we'll get that on the 24th. And if inflation shows pretty stable, and guess what? Oil prices are super low. We may see gas under $3 a gallon here. So we'll see what happens with that, but pretty much guaranteed to have 2 25-point cuts by the end of the year. So Housing Wire just came out with an article, and it talks about the housing boom that is imminent. It is going to happen. And it's all about the numbers, people. And here are the 10 reasons why Housing Wire says we should be bullish on housing. Number one, there is going to be an $84 trillion wealth transfer from the baby boomers and the silent generation over the next 2 decades. All right, you're going to see that they're going to pass on these homes with lots of equity to their children. That is going to create more movement in the housing market. Two, there is pent-up demand everywhere. First-time homebuyer age is now 38 years old. You got a lot of people under 38, you got a lot of people over 38, and they all want to buy homes. We're about ready to see the floodgates open as soon as we get more affordability. Lower mortgage rates unlock activity. Every 1% drop in interest rates brings 5 million more buyers into the market. So guess what? We're coming down right now. By the end of the year, we could be down a point. That's going to bring 5 million more buyers into the market. Number four, millennials are just getting started. Whew, millennials. They are the largest adult generation in U.S. history, 73 million. And 52% of them want to buy. That's over 38 million potential home buyers in the millennials. And hey, number five, Gen Z, they're going to be even bigger. Now, they have fewer, only 69 million. Only 69 million. Get out of here. All right. But 67% of them are eager to purchase. So that's 46 million more potential buyers coming into the market. There's a lot. That goes back to number two. There's a lot of demand, and that demand's not going away. Now let's get to number six. The boomers, they ain't done yet. The boomers are going to continue to buy and sell. Again, they could still control a majority of real estate of the housing market. And they may not have the 70s of real estate. They may not be delivering babies, but they will be downsizing. They will be dying. All right, and they will be passing this movement of real estate will continue to push market activity. Number seven, undersupply creates a long runway. We are still short 3.5 to 4.7 million homes. All right, this is a record high shortage. And we're currently building about 1.43 million new homes a year. That's far lower than the 2 million that we need. So the builders can't keep up with this demand. They just can't. Not anywhere. They're just not doing it. They don't have the manpower. They don't have the money. It's too expensive. So they are slow rolling. They're building, but they're not building as fast as we need them to. Number eight, the American dream is still home ownership. Pride, stability, and identity. You can't get that from crypto. You can't get that from stocks. You get that from owning a home. The other thing, hey, let's look at the median net worth of homeowners is around $400,000. The median net worth of renters is $10,400. If you're a millennial or a Gen Z, which would you rather be? I think I'd rather be a homeowner, right? Number nine, projections show decades of growth. This equates, you look at the U.S. home sale projections through 2045, between 5.5 and 7 million new homes coming onto the market, or baseline transactions, I should say, over the course of time. There ain't enough realtors for this action. There are not enough lenders for this kind of action. So really, projection, again, as long as we've got 73 million millennials, 69 million Gen Z. We got a lot. There's going to be a lot of growth over this next decade. And hey, the other thing is public policy, all right, could accelerate this movement forward. The demand for affordable housing, the money going into affordable housing. So really, 10 great reasons. We'll sum it all up with this bottom line. The housing boom is going to happen. Millennials and Gen Z guarantee decades of demand. Boomers are going to release inventory and reshape different product types. Lower rates, they're the match that we need to see this market go boom, and not the bad boom. All right, and the American dream is still real. Estate. Don't forget that. And projections show 5.5 million to 7 million sales as the new norm. We just need them rates to come down. The housing boom is gonna happen. It's gonna happen sooner rather than later. All right, Let's talk about rates, baby. Let's talk about you and me. And our rates are going lower. Can't you see? We're under 6%. That was really bad, but we're sticking with it. Our VA rates fell this week down below. There were a lot of reasons why. We started the week off. We had U.S.-China tariff beef. That caused interest rates to go down. That caused the stock market to go down. And then Fed members throughout the week talking about pretty much guaranteeing that they're going to cut interest rates as we end the year. So the result, we're back below 6%. And really, there's not a lot of this we didn't get a BLS jobs report. We didn't get the inflation reports when we needed to. So really, much of the movement is based on what you're seeing, the economy, and then with the different Fed members speaking. All right, and so what does this mean? Well, mortgage apps were down 3% last week for purchases, up 20% year over year. And refis were down 1%, but they're up 59% year over year. So really, buyers, you know what? The opportunity is out there. Over 3,000 homes in Hawaii, in Oʻahu, are on the market. I'm seeing record amounts of seller credits right now that are helping buyers get their rates down into the 4s on ARMs, 5/1 ARMs. So, man, the demand is there and the rates are getting there too. So don't discount an ARM. Remember, today's ARM is not like your mom and pop's ARM. This ARM is actually a really good tool and is making housing affordable. That's all I got for you this week. Have a great week. We'll talk to you later. Aloha.